My name is Henry Lai and my student ID is 2024263728.
Hello, my name is Jun2026 and my matrix number is 2024263382.
Hello, my name is Nurul Atika binti Abdul Jalil and my student ID is 20234044734.
Hello, my name is Jacqueline binti Juplis from SC110 and my nometric is 20242861088.
Nature of the business. Go Green Eco Store is a sustainable sole proprietorship business owned by Mr. Salim. This business sells eco-friendly household products to encourage sustainable living and reduce environmental waste. It offers affordable and environmentally friendly alternative for daily use while promoting a greener lifestyle. The business activity is sells reusable water bottles, bamboo toothbrushes, reusable shopping bags, and biodegradable food container. The second is provide delivery service to customer. We also promote sustainable living through eco-friendly product. We also use solar panel equipment to reduce electricity consumption. So our business mission is to provide affordable, high-quality, eco-friendly product that supports sustainable living. We are committed to reducing environmental waste, promoting responsible consumption, and encouraging customers to adopt greener lifestyles. So our business vision is become a trusted leader in sustainable retail by inspiring communities to embrace environmentally friendly practice. We aim to contribute to a cleaner, healthier, and greener future for generations to come.
So this is the trial balance I set 31 December 2025 for Go Green Eco Store. For particular and amount, cash at bank at debit side 9,900, cash in hand debit side 501,000, account receivable debit side 5,000, open inventory 10,000 debit side, and solar panel equipment debit side 20,000, account payable Mr. Lauren is credit 4,000, bank loan credit 10,000, capital 26,700, drawings at debit side 3,000, sales at credit side 55,000, delivery service revenue 3,000, sales returns 1,000 at debit side, sales purchases 30,000, debit side purchases return at credit side 3,000, rental expenses 6,000, sellers expenses 8,000, utilities expenses 1,500, marketing expenses 1,000, utilities expenses 1,500, marketing expenses 1,000, and general expenses is 1,200. So just total it at debit credit what total and credit side is what total. So this is the amount of the total debit and credit side. And this is the adjusted trial balance I set 31 December 2025 for Go Green Eco Store. The particular and the amount debit and credit is the same, but just plus accrued salaries at credit side 500 and prepaid insurance 200 at debit side. And in this adjusted trial balance, they have additional information. As edge, the closing inventory at 31 December 2025 was RM 12,000. The business use periodic inventory system to record its inventory. For additional information number 2, depreciations of solar panel equipment is added since the owner realized that it is its own useful life and haven't calculated it before this. For additional information number 3, employees have ended RM 500 salary that has not yet been paid. And additional information number 4, RM 200 of insurance release related to the next accounting period was met.
Okay, we will next move forward to the financial statement. So there are two financial statements, which is statement of profit or loss and statement of financial position for Go Green Eco Store. We will first look at the statement of profit or loss for the year ended 31st December 2025 for Go Green Eco Store. Reminder that these two statements amount are based on the particulars amount in the previous sheet, which is adjusted trial balance sheet. So first we have first particular, which is sales, amounting to 55,000. We need to minus it with sales return amounting to 1,000 to getting the answers for net sales, which is 54,000. And then we need to determine the value of cost of goods sold, because we need to less it with net sales to getting the amount of gross profit. So before we getting the amount of cost of goods sold, we need to determine the opening inventory, which is 10,000 ringgit, and we need to add purchases, which is amounting to 30,000, and we will need to minus it with purchase return 3,000 to getting the amount for goods available for sale, which is amounting to 37,000. Because of Go Green Eco Store have no carriage inwards, so we will skip this part, and we are going to move forward and minus it with closing inventory amounting to 12,000 to getting the amount for COGS, cost of goods sold, which is 25,000. After we are getting the amount of COGS, as I mentioned earlier, we need to minus net sales with COGS to getting the gross profit. So we are use the net sales amount 54,000 minus it with 25,000 COGS to getting the gross profit amounting to 29,000. Okay, we will next calculate the net profit. But before we can calculate the net profit, we need to determine the other revenue and operating expenses. So for other revenue, we will add it up. For Go Green Eco Store, we only have one other revenue, which is delivery service revenue, amounting to 3,000. Sorry. So we will plus it with the gross profit to getting the answer for 32,000. And then for operating expenses, we will minus it all. So all the expenses, such including rental expenses 6,000, salary expenses 8,500, utility expenses 1,500, marketing expenses 1,000, depreciation expenses 2,000, insurance expenses 1,000. So total of the operating expenses is 20,000. So we will minus these operating expenses with the 32,000. So 32,000 minus with 20,000 to getting the answer for net profit, which is amounting to 12,000. 2. We'll look at the statement of financial position as at 31st December 2025 for Go Green Eco Store. So all of the particulars in this statement includes non-current assets, current assets, capitals, non-current liabilities, and the last one, current liabilities. So for non-current assets, there is only one, right, which is solar panel equipment. So for the cost, the solar panel is 22,000, getting 20,000. Total current liabilities has accumulated depreciation. So we need to minus it. Any capital, we need to submit with NCL to getting the answer, which is amounting to 50. Accumulated depreciation, so it is balance 2,000 to getting the answer for the net value, which is 18,000, which is statement of financial position. So reminder that all of these amounts in this current asset are not manually cash in hand, causing inventory, account receivable, but it is using some formula. So all of to key in the answers, and most of it that I have being brought that have been mentioned in the adjusted price balance from the adjusted price balance sheet. For example, for the sales amount, we are just manually sum up to getting the answer using the formula current asset, which is 2,200. Remind the equal sign NCA non-current asset price balance will be add up, and we are going to getting the answer find the amount of which is 55,000 in C15, and then we next we will calculate the capital, and the Microsoft Excel will automatically generate used by Go Green in the financial statement sheet to finance the business. For the capital, for the net sales, I'm using the formula at equal sign net profit and click the E4 and let's it minus with amounting to 3,000 to getting the answer for the ending capital, which is 35,700 ringgit remaining balance of the capital for the year ended 31st usually December 2025. Next, we move over to NCL non-current liabilities. For some person here, Go Green Eco Store, the person really want NCI, which is bank loan, or helping the next last one we will calculate is current liabilities. All the current liabilities are so in financial analysis sheet, there are 5 calculations provided, which is first current ratio, asset test ratio, gross profit margin, next profit margin, getting the stock turnover ratio. For current ratio, we are using the formula current asset divided by current liabilities, and we are getting the answers 7.14 ratio 1. What is this meaning? This meaning current ratio is for every 1 ringgit of current liabilities, Go Green Eco Store have 7 ringgit 16 cents of current asset. This indicates a strong liquidity position for the business, and the business is capable of meeting its short-term obligation. For the second ratio, which is asset test ratio, we're using the formula current asset minus stock minus prepayment divided by current liabilities to getting the answers 4.49 ratio 1. This means that the business has 4 ringgit 49 cents of quick asset for every 1 ringgit of current liabilities, and it indicates a strong ability to meet short-term obligation without relying on the sales of inventory. The third one is gross profit margin. For gross profit margin, there are gross profit formula gross profit times with 100 minus by net sales, or gross profit divided by net sales times with 100% to getting the answers 53.70%. This meaning Go Green Eco Store earns approximately 53 ringgit 70 cents gross profit for every 100 of sales revenue after covering the cost of goods sold. This indicates that the business has a healthy markup on its eco-friendly product. For the net profit margin, we have net profit divided by net sales and times with 100% to getting the answers 22.22%. Which indicates for every 100 ringgit of revenue generated, the business earned approximately 22 ringgit 22 cents in net profit. This indicates satisfactory profitability for a small sole proprietorship. And the last one, which is stock turnover ratio, we are using the formula cost of goods sold (COGS) divided by average stock, and we getting the answer, which is 2.27 times. What is the meaning? This means that the business sells and replaces its inventory approximately 2.27 times per year. This indicates a moderate rate of inventory movement. So that's all for the financial analysis sheet, and we will move forward with the next sheet, which is CVP.
Today, I will present the cost volume profit CVP analysis for Go Green Eco Store, which sell biodegradable food containers. The selling price of each container is Rm 5 ringgit per unit, while the variable cost is Rm 3 ringgit per unit. Therefore, the contribution margin earned from each unit sold is Rm 2 ringgit. The business also incurs a fixed cost of 60,000. Based on the CVP analysis, the break-even point is 30,000 units. This means the company must sell 30,000 units to cover all its costs. At this point, total sales revenue is Rm 150,000, which equals the total cost of 150,000 ringgit, resulting in neither profit nor loss. When sales are below the break-even point, the company experiences losses. For example, at 10,000 units, the company incurs a loss of Rm 40,000, and 20,000 units, the loss decreases to Rm 20,000. However, once sales exceed the break-even point, the company starts generating profits. At 40,000 units, the company earns a profit of Rm 20,000, and 50,000 units, the profit increases to Rm 40,000. The graph also shows that fixed costs remain constant at Rm 60,000, while variable costs increase as more units are sold. Since each additional unit contributes Rm 2 ringgit, profit continues to rise after the break-even point has been achieved.